What's up, guys? It's J Lobos coming back to another episode, and today I wanted to go ahead and start the conversation. If you guys out there who have had student loans, keep in mind that after August 31st, they're no longer going to be part of the CARES Act, so we're going off this forbearance. As you guys already know, Matt Barket from Real Mortgage Solutions, he's here to answer some questions. And if you guys right now are in the process or looking to go ahead and purchase a property, but you feel that having student loans are going to be one of the things that are going to hold you back, guess what? Matt Barket and his team is making it happen for multiple people. And I wanted to bring him back on the channel to go ahead and talk a little bit about that. So Matt, thank you so much again for being part of the program. And guys, for you guys out there checking out the channel for the first time, consider liking, subscribing, comment, and share if you found this to be really educational. So let's go ahead and get started with the video, man. And I wanted to go ahead and talk a little bit about student loans. Is it possible, and obviously you guys out there, maybe you are attorneys and you have $100,000, $150,000 worth in debt. Is it possible for you to obviously get them into a mortgage?
Hey, first off, thanks for having me. And yes, it is possible. So in regards for how the bank looks at the student loans is what the credit report shows and also what your repayment is. So obviously there's two scenarios: either you're in deferment or you're paying it back. Okay. If you're in deferment, there's two ways of looking at it. FHA and Freddie Mac both, we just take 0.5% of the total balance, and that's your monthly payment. That's what we go off the qualifying balances of. For Fannie, it's 1% of the total balance, and we go off of, obviously the qualifying. So in regards to it, as long as, again, your income is sufficient and it covers that balance, then you're good to go. Or obviously, if you're not in deferment, you are paying it back, and you do have an income-based repayment plan, and let's say you have, you're talking about $2,000 instead of 1%, which is $2,000 a month. Let's say you're doing $150. We go off the $150. So obviously it would be a tremendous help towards your qualifying ratios.
So guys, there you go. Obviously, if you're looking to go ahead and purchase a property, you can have $100,000 worth in student loans. You can have 150, but you're hearing it right now. It's not really based on the amount. It's based on specific criteria. Obviously, Matt and his team, they offer a free credit consultation. He'll go into the whole analysis, look into your whole financials, things of that nature. He'll put the numbers together. Matt, let me ask you a question, because I know we were talking about this. What happens if a person has maybe one or two little blemishes, maybe a late payment? Is it still possible to be able to qualify?
Yeah, it's still able to qualify, but for FHA, you do need to have your debt up to date, because obviously it's a federal loan. But as long as it's up to date, and as long as I do get the approval in my AUS, we'll be good to go.
Nice. So guys, if you have obviously high student loans, debts, if you might have some sort of blemish, maybe a late payment, it's still possible for you to go out there and materialize, get this property, get this loan that you obviously go ahead and need. Anything you want to go ahead and maybe additionally share regarding student loans?
No, I mean, if you are in deferment, it is pretty simple with regards to requesting income-based repayment plan. So it is an issue with qualifying. You are able to request it with your servicer. And it may take a couple days, couple weeks, whatever the case is, but it's not going to prevent you from buying.
Got you. Now, let me ask you a question. Obviously, part of that deferment, and again, this is one of the things that we've obviously offered to some of our customers. It could be contingent based on the job that they have. Would it be something feasible rather for them to talk to you first before getting off the deferment, or is it something that they should handle on their own?
Either or. I mean, if I do the qualification, I can give both scenarios, whether they need to come off the deferment, or if they are obviously on a payment plan, then we can go off based off that. So it's kind of case by case.
Last question: how about if you do have student loans, and obviously you're on deferment because you're still in school, but you are making additional income? Is that also still? Does it matter that you're in deferment or not?
No, I mean, as long as you have 2 years of employment, or you have employment, whether or not you're making payments on it, you can still we can still go off the 0.5%, and you can still get purchasing.
Awesome. Guys, there you have it. Thank you so much again for the love and support. If you guys have any questions, if you have student loans and you're kind of concerned, you don't know if you're going to be able to buy or not, or even qualify, we got the experts right here. Matt Barket with Real Mortgage Solutions to answer your questions. And until the next time, thank you so much, Matt.
Thanks, man.
Thank you, guys.